Hey guys, welcome back to my YouTube channel. And on this particular video, I'm going to be taking you on how I basically go about take my trades from analyzing the key levels to then scaling down to my lower time frame and finding my correction entry and finding my entry to take a perfect trade. Because previously I've basically explained videos on how you can basically get directional bias, how you can basically mark your key levels, and how you can basically get a structure. So this particular video, I will basically be explaining how I combine my key level to get my directional bias and getting my entry. So without wasting more time, let's dive in. If this is the first time you are coming across my video, please subscribe, like, and comment. Let me know what you think about the video and things you will love me to talk more going forward. So let's dive into it. So basically, if I want to start analyzing my charts, first what I'll do is I'll go to my 4-hour time frame. Sometimes I will go to the daily time frame. Depending if I didn't see what I'm looking for on the 4-hour time frame, I basically go to the daily time frame. And at times I go to like weekly, but weekly just check the overall view of the market at the beginning of a new week or month, depending on that. So basically, what am I going to do here? I'm going to check where the market is basically reacting from. I mean, where the market is basically buying from and where it is like selling from. So basically, I'll place my tools here, my other tools here on this place. Then I'll mark it straight to where the market is basically like reacting from. Then you can basically see this rejection block here. So after this rejection block here, the market started buying from there. Then you can basically see at this point also that the market started selling at this point. Basically started selling at this point. So what am I supposed to look for? So on this particular pair, I'm going to be looking for buy. Why am I looking for buys? I can see like after the market, I can see that the market was giving basic series of break of structure here, break of structure to the upside here. So that's basically like mark my direction. Rather than me using trend line, basically use break of structure. So market was creating break of structure to the upside. So the market's coming back down here. Sorry. Market's coming back down here. It's just come and tap into whatever key level that is there and start buying. So the market is basically reacting back to the zone. Now I've seen where the market is buying from. Where am I expecting market to get to start selling from? Now there are two areas where I'm expecting market to get to start selling. Now this is the first one. These are how I basically go about me marking my charts. This is just this an OCL level here. An OCL just open and close level, and this is another other block here. Or this 4 hours other block here. So I'll basically map out where I'll be targeting when taking my trade, where I'll be taking caution when I'm taking my trade. So all these levels here, I don't know where the market is basically going to respect and react from. So all this one here, I just mark it out for me to just know where the market is going to get to and probably start selling from. So I'll just wait when the market gets there to give me a change of character. So to the downside, or I can just break the structure and keep moving to the upside. So what am I expecting? Just my market to get to this OCL level here and give me an M formation, something like this. Start selling. That if it's going to sell, and if it's going to buy. I'm expecting something like this. Market to get to this level, give me a sort of reaction, and give me something like this, then continue buying. So either ways, that's what I'll be basically looking for. Now since I've gotten my key level in that time frame, now it's now time for me to like move to the lower time frame. And if you see this OCL level, I'm this ejection block I'm about to is like another block on lower time frame. Like I've said before in my previous video, that those longs you are seeing, they are like the other block on lower time frame. And you see this last break candle 6, yeah, is on another block on 2-hour time frame also. So let me just go to 2-hour time frame. You see it more clearer there. Okay, I basically see this last red candlestick here. So although I have two ways I do go about my trades, either aggressive entry or a confirmation entry. So this one like this now, if I've seen it earlier, I would have gone in with an aggressive entry without is that about that. So now what am I supposed to be looking at? Just for me to keep taking buys. Here is an inducement for this OCL level. So to target this inducement and wait for the market to get to that OCL level, which I'm basically targeting. Now since I've gotten this, now it's time for me to go to my one time frame and look for confirmation and look for trades to buy. And you can basically see that this key level is like a very valid key level, because you can basically see an inducement protecting it, a bit of structure and favorable gap. So now I scale down to my entry time frame. So I will use that 30 minutes, 15 minutes, and sometimes 1 hour. I probably going to scalp maybe 15 minutes depending, but mostly I use 30 minutes and 15 minutes. Now it's not time for me to like get to get my entry time frame. Now since I've gone to the 15-minute time frame, now enough time for me to keep on joining the buy, since I'm doing that the market is going to buy. How do I know that the market is going to buy? Like basically when my market was approaching this key level here, so it was basically creating sort of reconstruction. You can see this major reconstruction to the downside here. This major reconstruction to the downside here. This is the last big of structure here. And I can say fracture reconstruction. I call this fracture reconstruction because for me to term a reconstruction as a value reconstruction, I must see like a 3 or 4 candlesticks forming. And I can see this major reconstruction. I can see like multiple candles forming, but you can see there just like 2 candlesticks that cause this. So this was a fracture reconstruction. So here is like my minor change of character here. This I MSS. I get taking it out. And also my major change of character here, this I, which causes this major reconstruction to the upside. I also see market taking it out. So this basically confirmed to me the market has changed bias to the upside and is ready to buy. I basically see from there, like I basically see multiple reconstruction to the upside there, reconstruction here, like a lot of reconstruction can basically see there. So which is confirming to you that market is buying. Now it's now time for me to like join the buys. Now there are a lot of opportunities you can use to join the buys here. This market has given me commission because it was the upside. Now this is one opportunity that I took last week. Yeah, it's another block here, and inducements protecting our other block, this low, and our inducement or liquidity, whatever you call it, protecting it, reconstructor here. And what we're targeting next high. So far the market is bullish. I'll target the next high to give us the next break constructed to the upside. And plus below the other block, targeting this high. This is a 3-hour trade. Or you can basically target this high here. Whichever one you choose, target this high here. Because since market is bullish, we expect market to take out that high. So we target that high as 5-hour trade. Then there's also an opportunity here to join the buy. If you miss that, another block here at this low at this moment, but market missed the entry. And this moment here, market didn't come back to that block to fill it, and it keeps on buying. And since market hasn't got to our like, since market came close to that like to our engagement level and sell. And this is what I say is majority of the time, if market take out a major liquidity, we see the market dropping first, then going down to take more liquidity from that side and more order from the outside for it to continue buying. So basically, we're still expecting market to buy to this second blue candlesticks and second blue line. Then we wait for confirmation. Then there is a particular one which I took and I'm currently on the trade. which is this. Then I didn't use 2 hours for this trade. I used 1 hour entry for the trade, and I didn't use other block. I used a rejection block, and this is the particular trade I took. This particular trade here. Particular trade here. And how did I get the particular one? I went to my 4 hour time frame and 2 hour time frame. So on my 4 hour time frame, I saw this OCL level here. Okay, and I told you I have two means of entry, my confirmation and my aggressive entry. So I didn't have to wait for much confirmation because I've gotten my confirmation already. Then I saw the 4 hour also aligning with these 2 hours OCL level. You see the OCL level is still present here, and also an rejection block is still present here. Then this low, this equal low as my inducement for it. And I came into I scaled down to 1 hour in order for me to minimize my stop loss. The reason why I didn't use my 15-minute time frame is because the other block look mitigated on 15-minute time frame. There's another block there, but the other block look mitigated. So I just decided to use this OCL level here, then my entry time frame here, then I place my long 2 here. My stop loss below the week, this week below it. Then I'm targeting this next high as my full take profit, and this is a sort of, I think, 10-hour trade. Okay, 11-hour. So that's what I'm targeting. This is my inducement present. Now you scan to 15-minute time frame, you see that the other block looks mitigated, and one thing you want to do is use a mitigated other block. Now basically see this other block here present, and it looks mitigated. This other block here, and see this wicks mitigated the other block. So that's why I went to high time frame to go and check what is happening, if I should use it or not. And this is the trade basically running on my MT5. And basically see this is raw GBP in blues in profit. So that's basically how I basically go about my trade. So yeah, thank you for watching this video up to this moment. Like, subscribe, and comment what you think about this video and what you like me to explain more next time. Thank you. See you at the other side.